Hey, welcome to this week's Mortgage Minute. The big news dominating this week is the fact that the Royal Bank dropped their rates. Wow, this was interesting. Here's one of the biggest, I love talking about this because it's very confusing for the average consumer. 2 weeks ago, the Bank of Canada came out and said they're not changing rates, and all of a sudden you hear in the news that the Royal Bank did change rates. And it came out with this and say the Royal Bank's dropping their 5-year interest rate. Well, why did they do that? The reason is the Bank of Canada controls the prime rate, and that dictates your variable rate. Okay? However, the 5-year fixed rates or 3-year fixed rates are actually governed by bond yields. So if we look at what the trend is in bond yields, check this out. You look at, we spiked up here, and look how much bond yields went down. This was January. See how that line went down? From December to January, bond yields dropped by 2%. So when banks make their rate decisions to see what they're going to charge you on your 5-year fixed rate mortgage, they're pricing that off the bond yield. The Bank of Canada, on the other hand, is making decisions that impact the variable rate. So that's why you might see the Bank of Canada say we're not changing rates, and then 2 days later, someone like the Royal Bank says rates are coming down. In the meantime, what's interesting is, let's say you're on a variable rate mortgage. That means you have a discount off that. What banks are going to start doing is making money by changing or lowering the discount. So it's critical that you're paying close attention to what your discount is on your variable rate now. Some people will say, oh, I got a variable rate and I got prime minus 30. Well, you know, you could have got prime minus 90 or prime minus 100. So if you're shopping for a mortgage or your mortgage is up for renewal, make sure you give us a call. In the meantime, here's an article that came out saying economists are saying that the economy is slowing down. There's downward pressure on the economy. So the Bank of Canada may actually look to use rate cuts as a tool. That's right. After all this talk for almost 2 years, the rates are going up and up. We may see a turnaround completely and actually see the Bank of Canada cut rates. In the meantime, global pressure is really ramping up here. This is an article saying that China might just see the worst economic downturn or slowest growth since the 1990s, or since 1990. Now, this is a critical thing on the Canadian economy. It puts a drag on the overall economy, and where you're starting to see that is increased volatility in the stock market. So, hey, guess what? We're moving close to February. It's RSP season coming up. A lot of talk. You see commercials on TV all the time about your RSPs and your TFSAs and what you should do with your money. I'm just saying, the stock market is very volatile right now. It doesn't mean don't put it in there, but maybe don't put all your money in there. Again, I'd like to suggest people start looking at alternatives, such as, here's a report from AP Capital that comes out with their Mortgage Investment Corporation Fast Facts. If you would like a copy of this, send me an email. If you're watching this, just send me an email and say, I'd like a copy of those Fast Facts on AP Capital MIC. MIC is a Mortgage Investment Corporation. It just creates a non-correlating asset that is an alternative to putting your RSPs into the stock market. Something to keep in mind, something to think about. And that's the Mortgage Minute for this week. We'll talk to you soon. Thanks.